Good day, fellow investors. Visa quick take. So I did an analysis of Visa a few years ago discussing the delta of the delta, which is a tool that comes in handy when analyzing growth stocks. The point of it is that when things go well for growth stocks, then everything goes well. You get a double whammy there, higher P/E ratio, higher stock price growth. However, when things go bad or not as expected, then you get a double negative whammy, lower P/E ratio, and stocks down on lower earnings, lower than expected earnings, which is the delta of the delta tool. We'll put the link in the description below. And that is a big risk when it comes to highly valued stocks. Visa is now down 30%, as is the market, but the P/E ratio is still extremely high. If in 5 years the market says, okay, I'm happy with Visa, great business, but I give it a P/E ratio of 18, then no matter the earnings growth, the stock might go nowhere for 5 years, and that's a significant risk. Let's discuss the estimations and the business, because whatever we think about, I'm using Visa daily for whatever payment, which means it has a great business position. And if we look at estimates, we are now at 7.43 from earnings per share, and everything is expected to just keep on growing and likely double in 5 years. So really good numbers, nothing wrong there. If I look at the last quarter, huge growth in whatever metric you look at, so perfect for Visa. It's expanding on its moat. Cash is used less, which means that more Visa is used, thus the trend is stable there for Visa. Nothing wrong. If we look at the numbers, in 9 months they made 13 billion by cash provided by operating activities, very little capital expenditures. The business is so strong, high free cash flows, and everything is used to reward shareholders with share repurchases. Now, when it comes to share repurchases here, I consider these as extremely positive because Visa, Apple, the business is likely to be there 5-10 years down the road. So if you do repurchases now, great. We have discussed eBay in this analysis. If you do repurchases and the business is going down, that's a lot of value destruction. So be careful there. Visa will do great, but my issue is the valuation. I see more and more people just Apple Pay, Google Pay, this and that, and I'm thinking, can Visa become a legacy business? Okay, it will likely grow, but the margin, the moat, the pie might get taken by the digital payment systems, which means that at a P ratio of 27, I'm not happy sitting in such a great business at a high valuation or at, let's say, a fair price for the business. Because the high valuation brings issues if the expectations that are great now turn to negatives, then I have a lower P/E ratio and the stock down. And if the market tells me that it wants an 18 P/E ratio, that's what Google has now. So if I look at my YouTube portfolio, Visa is not a candidate because I prefer Google at 18 with similar growth projections ahead than Visa at 27. So that's something that I feel about Visa. Nothing wrong about it, just my quick take, great business, great everything, but now it is also fairly priced and the good is priced in the stock no matter the decline. Of course, macro and everything is declining, so is Visa, that's a given. If that rebounds, Visa will rebound, but it is simply not for me from that perspective. We have 3 contenders from this analysis for now, still Kaiser Aluminum to do. Thanks for watching, and if you enjoyed these quick takes, smash that like button.